All right, what is going on, everybody? It is Monday, August 26th, and this is just kind of like our little long form, short form market recap for the day, right? So I just wanted to go over what I was thinking this morning, how I enacted those plays, and really just kind of how the market unfolded, how I kind of was testing out a new theory, just price action based theory, into the later session of the afternoon on a paper account. Um, and it seemed to work out pretty well. So I'm going to share that with you here also. But I'm first going to dive into our first play today on our live account. So as you can see down here in the bottom, we have our trade evade, our take profit account. We made $300 this morning. So I came to my computer this morning, and I put these circles here to highlight these lows. Obviously, you can see with the trend line that these lows are higher lows. So one must assume until the markets don't, that it will make another higher low. Today was an example where it broke down and didn't make that higher low, but you don't know that at the time. So you got to kind of ignore this price action because I'm only talking about this right here. So I was taking that into account. I had my 15-minute chart up. I have my breakout indicator that I developed on the chart, and I already had our support marked out for this morning. As you can see here, this was just like our little support from overnight. So I knew high probability that if overnight support got broken, that we're going to be coming back down to the lows of this trend line. So our indicator actually had that marked out perfectly. Our entry was below the low of last overnight high, last night's high, or sorry, last night's low, and you can see we opened short 708.50. So as soon as we broke through that level, I was short. Now, we wanted to get out at 634, but I actually got out at 59, which was right here above our trend line, because I'm assuming markets are going to put in that higher high. You have to assume the markets will put in that higher high. Markets continued to fall, but I didn't know that at the time. I'm happy I made my money. There's nothing wrong with that. You have to be okay with that. That's the game plan. I stick to the game plan. So that's how that played out. So pretty easy morning, $300. Now, if you want to stick around for the theory I was testing out in our paper trading account, go ahead and continue. If not, thanks for watching, and we'll see you tomorrow. For those of you who do want to pay attention to that one, I'm going to go ahead and pull over to this chart right now and dive into that. So as you can see here, this was some overnight stuff that I was trying. Same sort of strategy. Made $832, lost 400, and then every trade intraday I made was profitable. 300, 150, 300, 100, 250. So there seems to be some pretty good merit to it using higher time frame candles. As you can see, I'm on a 10-minute chart right here. I'm going to pull up and have it show my executions. All right, perfect. So what we had here was a support structure level, right? That we had. That's pretty easy to see. And markets fell right down into it. Now, I wasn't paying attention, but as you can see here, that the volume right here on this candle represents this candle. So you have a lot of people capitulating. This is the capitulation volume. This is the capitulation candle coming down into our support structure. So what do you note of that? Well, this candle is coming back in and closing well above our support level with volume, and all of the sellers are out, right? Look at this volume candle. There's no volume on that candle at all as far as selling pressure goes, because look at all of this. All of the sellers are done. It's buyers' time to step in, and the buyers did step in. They stepped in right here. So with the buyers stepping in right there, you could have opened a long position, but I wasn't at my computer. Otherwise, I would have tried this since it was just paper trading. But so I missed that one. But this was perfect. As I was doing all of this research last week and over the weekend, I found out that volume moves are a lot more valid, although the range bound moves still tend to work out. And I'll kind of show you that here in a moment. So you could have taken that play and you're like, whoa, how do I know where to get out? Well, you're going to have your boxes of your supports and resistance structures somewhere around here. So I'm just going to put this box here. This is going to kind of be a support resistance zone here. We had to bounce, sold off there. Buyers, sold through it. All right. So markets rallied up and didn't quite get there, but we did on this candle where I actually managed to sell when I got on my second position. So essentially, you'd be looking to sell up here. If you saw this big wick candle, usually I call it the long wick theory. Usually, if you have a long wick, markets will tend to move in the opposite direction of that long wick. So if you can see here, as this happens multiple times, long wick, markets rallied, long wick, markets rallied. We kind of have some long wick theories up here, and then markets dropped. So all in all, it seems to be a pretty consistent basis. Long wick, markets rallied. Long wick, markets dropped. So you can kind of get the point with that. So here I went ahead and I was sort of looking for the same kind of bullish candlestick pattern, where you're kind of overlapping by at least 30 or 40%, or you just completely encapsulate the previous candle. I think this is called a morning star. I don't give a shit about the names, but I was looking at this one right next to this guy, right next to our support, and it was a bullish engulfing candle next to a doji. So indecision and then buyers, right? So if I'm looking at this candle as my trigger candle, which I bought this candle at 576, which was the close. Look at our right there. I got 576 on my cursor. So I bought that candle close. Well, what are we looking at the volume? So we have buyer volume and very low seller volume. So that was my confirmation. Okay, we're making a higher low, right? So this was our original low. This is a potential higher low, so I'm taking it. I put my stop below this wick, and my target was in this area. And that's exactly what happened. It played out exactly like I wanted it to. Now, you could also have shorted this move, right? So you get this sort of, there's a name for this candlestick right here. It's like where you kind of have more wick on the top and a little on the bottom. It's not exactly a gravestone. The name is escaping me right here, but this pattern right here, this candle right here that I actually closed my position on. I could have taken a short on, because this was forming a bearish candlestick pattern. So you could have opened short on this candle with your stop loss above the high of the wick that we just took our profit from, and that would have actually been a trade that you would have taken right back down to our support. Now, you probably would have gotten out at this swing low here, looking at our most recent low, not this low, and that would have been your profit target. And you can see how that went. Now, I didn't take that, but I did close it. And I was sitting back and I was like, hey, usually my profit target zones, unless trading market open volatility, usually tend to be where the market turns around. Just flip the trade, right? But I haven't ever seemed to think that in live time. I got to work on that. But you could have flipped that trade. I didn't, but you can see here, markets were falling down, and we got another bullish candle right here. This was a completely engulfing candle. I was watching this for about 30 minutes. I was expecting this candle up here. You can see our tail. I wanted it to close up here, and I wanted to enter long to try that again. But we went down, we made a doji, and I was like, this candle is going to be the one, and it wasn't. And then I get this candle. This is the bullish engulfing candle. Now, I did notice on this one that our volume was pretty much the same, but the selling pressure was less than the candle previous. So just noting all of these things as I'm trying to formulate my actual rules for this sort of trading strategy. Higher volume, the better. Um, but I was looking at this already being a range bound play, so I didn't really necessarily worry too much about the volume because we already made a top here. We made a top right here. We made a top right here. We made a bottom right here. We made a bottom right here. So I was expecting range bound plays for the remainder of the day. So I wasn't really taking into consideration the volume. Otherwise, I wouldn't have taken that trade if I was solely looking for a confirmation like we were looking at over here on these moves. So with that being said, I rode that guy right back up here into this high's resistance. I didn't wait to go much higher because these guys got resisted. So I wanted to take profit just a little bit underneath there. And as you can see, fully closed my position for 621. Wicked right into it, right? And I did trim a little bit. My stop was 40 points. So I closed half 40 points in profit and let the remainder run. So that's kind of how I'm looking to trade range bound markets because I've been trying to figure out how do I trade a range bound market with having like a decent sized stop loss because you could have been waiting here to buy this right here into the support and you could have had a stop loss, a tight stop loss of 20 points on the opposite side of that support structure. Well, you would have got stopped out, but the play was correct. So just waiting for some candlestick pattern, a bullish candlestick pattern. Sure, I missed out on some of the move, but you never really know where the low is going to be. So I wanted to see these sort of bullish candlestick patterns to kind of help me mark my entries into the markets like so. So that's kind of what I did today, just fiddling around with that. So I'm going to be implementing that throughout the rest of the week in the paper account, just trying to get used to executing that since it is sort of a new technique. And I am not trading anything crazy. I'm managing everything the way I would in a real live trading account. I think paper trading account is pretty stupid because a lot of people will treat it as such as a paper trading account. But if you actually take the time to utilize the paper trading account as if you were using real money, real risk, not absurd contract sizes, sticking to your profit levels, your stop loss levels, and not pulling it, oh, let's see what happens, and actually sticking to your game plan, then you move into the markets, that's fine. It helps you pull the trigger. But if you're using it, getting excited about the money you're going to make, no, don't do that. Don't do that. Because you will lose everything in the real markets. You're not teaching yourself anything. So use paper trading to figure out and learn how to execute the program that you're learning and then jump right into real money. So I am going to continue doing this in paper for this week, and then I'm going to move it into my live trading toolbox. So I hope this kind of helps you guys today, going over our live trading plan. Just to recap real quickly, if you're still with us, overnight support was broken. Our 15-minute indicator told us to sell short. As soon as we had broken that, our target was just beyond the trend line, but assuming we had a higher low needed to be printed, I took it right before that trend line. So it is what it is. We were profitable today. So I appreciate you guys stopping in and watching this video. If you made it to the end, give it a like, share, do whatever the YouTubes do. Join our Discord, and we'll see you tomorrow. Thank you.